Welcome to the Money Savvy Parents podcast, the podcast for entrepreneurial parents to work towards becoming financially invincible to then pass that vital life skill down through the generations. I am your host, Laura, mother to 3 beautiful children and founder, financial strategist for Savvy Peacocks. Each week, we'll be delving into a new money topic to get you and your family more money savvy. Let's remove the taboo from money together. Hello, everybody. Welcome back to my podcast. Great to have you here with me. This episode has been inspired actually by a few things that have happened in my life. It keeps coming up recently. And also the last few episodes, I did a great episode with Carla Edwards a few weeks ago. And there was another one with Julie Flynn that got me really thinking about the topic of insurances and how we can ensure that we make the right decision and that we understand how they work. Now, I have already done an episode on insurances before, episode 24 on series 1. So if you're interested, then go back and listen to that. And if you haven't listened to Carla's episode or Julie's episode, then please go and listen to that as well. I wanted to just share with you a bit of a story around what's going on with me with insurances at the moment, which will also include some hints and tips about something that you might need to think about. So I've had a few instances recently with insurances. The first one is renewals. Obviously, a lot of our insurances, home insurance, car insurance, that kind of stuff, all comes up for renewal on a yearly basis. And mine came up just a few months ago, and I took the opportunity to have a look around and see what options I had available to get my insurance down even cheaper. And something that I can really advocate for, if you've not used it already, is cashback sites. So I think in this instance, I use QuickQuid, but there's quite a few different ones. They all work very similarly. And basically, they're a search engine where you can compare your products that you're buying. In this instance, it was insurance, and then they will give you cashback on top. So what happened was my car insurance, I think it was, home insurance, came through for renewal. It came through at £250. And when I went on the comparison site, I found I could get it for £170 a year, which is already a great saving. And then on top of that, they would give me £40 cash back. So I've got that extra as well. And what I did with that as a best practice is that extra money that I didn't spend on the car insurance that I expected to spend, I still kept it in my savings account for my car. I haven't taken it out or used it in another way. Of course I could, but what I chose to do is just keep it in there. So now I've got £130, £140 in my account ready for next year's renewal, because obviously you never know, do you? You don't know, is it going to go up? Is it going to go down? Which kind of leads me on to my next insurance story that I had, which was Bupa private healthcare cover. So when I left the bank, I decided to keep my Bupa healthcare cover going, which is private insurance. The reason I did that was because of the ankle injury that I'd sustained. And I wasn't quite sure, was I at the end of getting my ankle fixed, or might I need some more help and support on it? So I decided to renew it. And because I was an ex-member of staff that I'd had like a preferential rate, they gave me a bit of a discount. It's still fairly expensive. I think it worked out something like £58 a month. But I thought that's worth it if potentially I'm going to have another operation and physio. Turns out I did. So in this last year, I've used £1,900 worth of cover for the operation and the physio that I've had. So actually that £58 was worth it, because the surgeon told me that if I'd waited on the NHS for the second surgery, that it would have been a good 18 months, 2 years before having that, because the wait lists are so long, and I had it booked within a matter of 4 or 5 weeks. So that was worth it, because then I've been able to make that claim, and that all made sense. What I didn't anticipate though is a massive increase for this next year. So it's due for renewal in May. I've had the renewal come through, and it's gone from £690 a year to just over £1,000 a year. So it's a massive hike, huge. It's going to go up to something like £85 a month. So what I did in that instance, and this is why I wanted to share it with you, is that if you see insurances go up, the first thing you're best off doing is speaking to the insurance company, understanding why it's gone up, understanding what's been taken into consideration, make sure it's correct. And then secondly, look at the different options that you have to be able to change the amounts and whether those options are suitable for you. So when I did this yesterday, I could increase my premium, my excess, sorry, but that didn't really appeal to me, if I'm honest, because with this insurance, you have to pay the excess up front before you can claim on it. So that doesn't really appeal to me, although it does reduce the monthly cost. My excess is already £200. That just feels comfortable to me. But what I could do is reduce the amount of outpatient facilities I can use. So at the moment, I can claim up to £750. If I reduced it down to 500, it would be a lower amount. And there was another option, whereas if I didn't include consultation fees, but I did include anything that was aftercare, then it would be even cheaper. So obviously in my instance where I had my ankle injury, I was taken in an ambulance, served on the NHS, amazing, had my operation, then that would have counted because I then had x-rays and physio after the injury through private healthcare. So it would have been covered, and they still cover any other major surgery. So my second surgery would have still been covered. The bit that wouldn't have been covered is any consultations that I had in between, or any scans and x-rays that I had in between, which I did have some of those. So, I mean, the chances of me having another ankle injury are slim to none, but I'm just using that as an example. So having a look at your options is definitely tick number one. So now I need to think about what options I want to take out, because I can take out a few of those and get it about the same as what I'm paying at the moment. And it's just whether I want to continue with that, because it's not only changing that and continuing with it. I've got to remember that probably next year it may well go up again, because they take into account how many people have claimed on the insurance and rising costs and all that kind of stuff. So yeah, increases is something to be aware of. When you buy an insurance, there will be some insurances where it's fixed and they promise to never change the premium, but majority of the time they are variable, which means they could go up. So you need to be aware of that in your budgeting, because it's a bit like when you buy a car, on the face of it, the price sounds great, but obviously it's not just that price, it's the cost of paying for your insurance, paying for your tax, paying for your tires to be changed regularly, all those things. So you need to account for a bit extra. So I would always say, if your face value today is £50, add on a nominal amount, let's say another £20, to take into account for increases that might come along the way. And hopefully in that time your salary will increase anyway. But not making sure that you choose insurances that cover you adequately, but don't push your budget so much that if they increased it, you wouldn't be able to get cover. So that's the first thing. And then another story that came about this week, and this is why I've done this episode, because these things just keep coming at me with insurances, is I had another insurance that I've been paying for about 10 years. I've been paying it, and I'm just in the process of claiming on it. So hopefully that all goes through. But I had a letter from the insurance company saying, we've decided we don't want to offer this product anymore, and so we're cancelling it for everybody. And there is no replacement for this insurance. It's quite a rare one that I bought 10 years ago. So this is the other thing to remember with insurances. When you're thinking, okay, what are my shortfalls? Where have I identified that I need to get insurance or some kind of safety blanket in place? And as in Julie's episode, writing that all out on a one page so you can identify those shortfalls, you need to think, like, I'm buying this insurance now, could it go up? If they cancelled it, what would be my replacement? And is there something else that could take that place? Because yesterday I was having a conversation with someone who doesn't get full sick pay, they just get statutory sick pay. And they were sort of complaining about how terrible this was of the employer. And my response back was, that's where the employer's responsibility ends. They've got to pay statutory sick pay, but it's your responsibility to make sure that if you are off sick, that you can still cover your bills. So you can buy an insurance for that, absolutely. Or you can choose to save up and set aside an amount of money so that if you are ever off sick, you've got enough money, a couple of months, to pay for your bills so that your bills will always get paid. So it's thinking about what your options are. Now, when you're looking at these insurance, as well as thinking about it could increase, they could cancel it, things could change, I need to sort of think about different options available. I would urge you to do two other things, is look at the percentage of insurance policies that they pay out on, or the insurance claims that they pay out on, because that might surprise you. I remember when we worked at the bank that we used to sort of pride ourselves being able to say that we paid out 90% of claims, but a lot of insurance companies are only 50% of claims. So that's for me a red flag, because if they're only paying out 50 to 60% of insurance claims, then either their process is really difficult, or it's not clear what they do cover, or they just make the process so difficult that you end up giving up, which is the second point. Find out before you buy the insurance what their payout process is, because on the face of it, it might seem like, oh yeah, they'll pay out for this, that, and the other, and it's great to have that cover. But if that process is actually quite arduous when you're already going through a difficult time because you're having to claim on your insurance, that can be quite tiresome and quite difficult, and may well end up meaning that you just give up anyway. So there's a few things there to think about. Now, I did talk about this in my episode 24, but I just want to share at this stage that when you're looking at all your options with insurances, I would urge you to really consider critical illness, because it's the one that for me is the most important. And I tell you why it's the most important. When you're diagnosed with a critical illness, whether that's cancer, one of real nasties, it could be a whole host of things. The last thing you want to be thinking about is, how am I going to pay my mortgage? How am I going to pay my bills? How am I going to pay my childcare? Whatever it is that your priority is. And of course, don't forget, being critically ill, you still may well have some level of lifestyle that you want to sustain. You may have things that you've committed to. So for me, critical illness cover is the one thing that I think everybody should consider, even if it's a small amount. Take out the most insurance you can for the most amount that you can afford, because it's the one thing in your life, for anyone that's ever been touched with critical illness or known anyone that's gone through that, you don't want to be thinking about money at that time. You want to be putting all of your energy into getting better, and your family are going to want to do the same without stressing about money. So I would say, if you haven't got critical illness cover, look at that. Hopefully you found that useful. Please reach out and let me know your stories. I'd love to hear them. It's just interesting the way I've had now a good four or so instances where insurances have come to mind, and it just made me think maybe others don't understand what to look out for. So just as a reminder, please bear in mind that the premiums could go up. So don't ever go up to your full budget or allow for maybe an increase in the next year or two. Be aware that they may well just cancel it. So what are your other options? What's your backup plan if that happens? And is the insurance the right thing to buy, or could you use another option? Look at their percentage of insurance claim payouts and their payout process. And then lastly, if you've not got critical illness, I would 100% ask you to look into that, see how much you can get for the amount that you can afford, because when you're suffering with a critical illness, the last thing you want to be doing is worrying about money. I hope you have an amazing day, whatever you're up to, and I look forward to having you back with me on the podcast another day. Take care. Thank you so much for listening to the Money Savvy Parents podcast. If you enjoyed today's episode, then please subscribe to be alerted to the new episodes. If you want to learn more about your relationship with money, then start off by taking my Money Languages quiz on my website, www.savvypeacocks.co.uk. Let's remove the taboo from money together.